The tech industry is in the middle of a massive shakeup. Valuations are falling, old revenue streams are drying up, and new players are rising from places no one expected. The AI boom has shifted capital, the hardware race has changed priorities, and regulators are finally tightening the screws on everything from data collection to app stores. In short, the era of growth at all costs is over. The question now is simple. Which business models will actually survive, and which will thrive in this new tech landscape? Let's break it down. For the past decade, tech success followed a predictable formula: build fast, scale globally, collect data, and monetize through ads or subscriptions. But that model is now under pressure. Investors want profitability, regulators want transparency, and users want trust. The result is a reshuffling of what works and what doesn't. So let's look at 5 business models emerging as winners in the tech shakeup and why they matter. First up, AI as a service. Companies like OpenAI, Anthropic, and even smaller startups are building something that used to sound impossible: intelligence as infrastructure. Instead of selling apps, they're selling access to cognition. This model works because it scales like software but sells like a utility. Businesses now pay for language models the same way they pay for cloud storage, by usage. It's predictable, high margin, and sticky. Once a company integrates AI into its workflow, switching becomes nearly impossible. Microsoft and Google are doubling down on this model. By integrating AI directly into Office, Workspace, and Azure, they're turning intelligence into a service layer baked into productivity. It's not just a feature, it's a moat. The second thriving model, the vertical tech stack. In the past, tech firms tried to be platforms, serving everyone. Now, specialization is the new scale. Take Palantir in defense tech, Service Titan in trades, or Toast in restaurants. These companies don't chase the whole market. They own a niche. They build software, hardware, and analytics tailored for one industry and dominate it end to end. Why does it work? Because verticalization creates efficiency, loyalty, and defensibility. The next big wave of startups will likely follow this model, not trying to be the next Facebook, but the next AI for healthcare, AI for logistics, or AI for manufacturing. Third, we're seeing the rise of hybrid hardware-software models. Apple mastered this years ago, controlling the full experience from silicon to software. Now, others are catching on. Tesla does it in cars, Nvidia does it with chips and cloud, even Meta is moving toward it with its Quest headsets and upcoming AR glasses. The reason? AI needs physical grounding. Compute is the new oil, and whoever owns the chips and devices controls the gateways to intelligence. This model thrives because it ties users to ecosystems. Once you own both the product and the platform, you control margins and the experience. And that's gold in a crowded tech economy. The fourth thriving model, the subscription to value pivot. Remember when every company wanted a subscription model? It worked, until people got tired of paying for dozens of apps they barely used. Now, successful companies aren't just charging recurring fees, they're tying those fees to tangible outcomes. Think of Adobe linking subscriptions to AI-powered creative tools that cut production time, or Canva introducing enterprise plans that help teams automate workflows. It's not about recurring billing anymore. It's about recurring value. The winners in this space are those that continuously deliver measurable improvement, not just access. The fifth model that's quietly dominating, ecosystem revenue sharing. This is where companies build open ecosystems that let others profit from participation, and in return, take a cut. Apple's App Store, Amazon's Marketplace, and even OpenAI's GPTs store all run on this principle. Instead of doing everything themselves, they create a framework where others innovate while they collect the tolls. The reason it's thriving now? Developers and businesses are shifting away from total dependence on one platform. A well-run ecosystem model encourages diversity while still capturing revenue from the entire value chain. Now, What about the business models that are struggling in this shakeup? The first casualty is ad-heavy dependency. Social media firms built their empires on advertising, but privacy laws, ad tracking limits, and user fatigue have changed the game. Meta's pivot to AI-generated discovery and TikTok's shift toward commerce show the same thing. Ad dollars alone are no longer enough. The second struggling model is purely transactional marketplaces. Uber, DoorDash, and Airbnb all thrived on volume until volume got expensive. Inflation, regulation, and competition squeezed margins. The new focus? Building ecosystem stickiness through memberships, loyalty programs, and fintech integrations. And finally, the growth at all costs startup model, the darling of the 2010s, is dying fast. Investors no longer reward expansion without a path to profit. Instead, they're favoring efficiency-first scaling, where automation, AI, and disciplined capital allocation define success. So what does this all mean for business leaders and entrepreneurs? It means the new tech winners won't necessarily be the biggest. They'll be the ones that are structurally sustainable. They'll be companies that build AI into their workflows, not just as a product, but as infrastructure. Focus on deep verticals instead of broad markets. Control the customer experience from hardware to software. Price their products around real, ongoing outcomes. And create ecosystems where others can thrive alongside them. The shakeup we're seeing isn't the end of tech growth. It's a return to fundamentals. Profitability, defensibility, and innovation that compounds. If the 2010s were about disruption, the 2020s are about durability. And in this new era, the question isn't just who can build the next big app, it's who can build a business model that survives the next big storm. Because in the new tech economy, resilience is the ultimate innovation.